Hi friends, we just finished the operating ratio. So next we have to move to the next ratio. Net profit ratio, we will look at net profit ratio after we complete studying about operating profit ratio, because first if we look at operating profit ratio only, it will be easy for us to understand. So friends, what is operating profit? You already know about gross profit and you already know about net profit. But what is this operating profit? See, operating profit is a profit that's in between gross profit and net profit. So, first in a profit and loss statement, first we have the sales. From the sales, when we reduce the cost of goods sold, we will get the GP, that is the gross profit. From the gross profit, when you reduce the operating expenses, other operating expenses, and we add the operating incomes, then we get the operating profit. So purely from operations, whatever is the profit that we receive is the operating profit. It is different from GP. GP is sales minus cost of goods sold, or revenue from operations minus cost of revenue from operations, and from that we get the GP. And after we receive the GP, when we add the operating incomes and subtract the operating expenses, we get a profit, that is known as operating profit. From operating, after we receive operating profit, how do we arrive at the net profit? Operating profit plus non-operating incomes minus non-operating expenses will give the net profit. So net profit is that final profit that we get after we reduce every expenses, like every non-operating expenses, and taxes also will be excluded. After excluding taxes and non-operating expenses, whatever profit we get is the net profit. So first we have GP, after that we have operating profit, and after operating profit we have the net profit. So operating profit ratio reflects the percentage of profit a company produces from its operations prior to subtracting taxes and interest charges. See friends, taxes and interest charges are non-operating expenses. So non-operating expenses will not be considered for operating profit. So that is what they have given. Prior to these expenses, whatever is the profit that a company receives is the operating profit. So this ratio helps in determining the overall efficiency of a business operations. Then formula is operating profit divided by revenue from operations into 100. We will understand what is operating profit. It is the profit a company generates from its core business functions, where the deduction of interest and taxes is excluded from the calculation. This I already discussed with you friends. So operating profit is what? It is GP minus other operating expenses plus other operating incomes. So other operating incomes, here we have examples for operating incomes, like commission received, discount received, all of those are operating incomes. They relate to the operation of the business, because commission received is it is arising due to operations of the business, and any discount that is received is also arising due to operation of the business. I will give you an example of non-operating income so that you can understand this better. Income like profit on sale of a machinery or profit on sale of a fixed asset, they are not arising due to operations, right? So those will be classified as non-operating incomes. Another example of non-operating income could be rent received from letting out premises on rent. If the company is renting out its premises, then the rent that it has received will also be called as non-operating incomes. Now an example of operating expenses could be expenses like depreciation, amortization, administration expenses, selling expenses, so office expenses, all of those will be operating expenses. So non-operating expenses example would be any finance charge, interest charge, taxes, all of those are non-operating expenses. Now operating profit is GP minus other operating expenses plus other operating incomes. Operating profit, if we have to do reverse calculation, net profit before tax plus non-operating expenses minus non-operating income. This one is a formula that calculates operating profit from the net profit, that is from the reverse side. Then revenue from operations we already know. So yes, non-operating incomes and non-operating expenses are ignored in this calculation because the name itself says it all. This is operating profit ratio. So anything that is not related to operations will be ignored for calculating this ratio. And then operating ratio and operating profit ratio are interrelated. See friends, both operating ratio and operating profit ratio are complementary, meaning if operating ratio is 30%, then operating profit ratio will be 70%. And if operating ratio is 60, operating profit ratio will be 40. So total of both these ratios will be 100%. A rise in operating ratio will lead to a decline in the operating profit ratio. So operating ratio is an expense ratio and operating profit ratio is a profit ratio. That is why it is complementary. The total of these two ratios will be 100%. And operating profit ratio is expressed in percentage. Now we will go and understand about net profit ratio. Net profit ratio talks about net profit. We all know what net profit is. Net profit is the profit that we get after we reduce all the expenses like non-operating expenses and taxes, all of those if we reduce, and if we add non-operating incomes, whatever the profit we get it is net profit. So net profit ratio is the ratio of after tax profits to net sales. It reveals the remaining profit after all costs of production, administration and financing have been deducted from sales and income taxes recognized. Income taxes should be reduced to get the net profit. Now what is the formula for net profit ratio? It is net profit after tax divided by revenue from operations into 100. Net profit is the measurement of a company's profit once operating costs, taxes, interest and depreciation have all been subtracted from its total revenues. So no matter if it is operating or non-operating, all of that does not matter here. The only thing that matters is net profit is after all of these expenses and even after tax. So net profit is equal to GP minus indirect expenses and losses plus operating incomes, plus other incomes minus tax. Revenue from operations is nothing but sales. We already know revenue from operations, and net profit is expressed in percentage. Let's see one sum related to net profit ratio and operating profit ratio. So this is illustration number 83. The question asks us to find out net profit ratio as well as operating profit ratio. They have given certain items and they are revenue from operations, which is rupees 2 lakh. They have given GP and then they have given office expenses, selling expenses, interest on debentures and accidental losses, income from rent, commission received. Okay, so these items are given. We have to calculate the net profit ratio and operating profit ratio. So friends, for calculating net profit ratio we need net profit. How do we find out net profit? From GP we have to reduce all indirect expenses and losses and add all incomes. So here we need not segregate like if it is operating or non-operating. That is not required for calculating net profit ratio. So we will just go about reducing every expense and adding every income. So GP is given, which is 75,000, and to that 75,000 add every expense. So what are the expenses? Office expense, selling expense, interest on debentures, accidental losses. So these four have to be reduced from the GP, and then income like income from rent and commission received. So both these incomes have to be added. Here we have done this in two different steps, that is indirect expenses and losses is separately found out and incomes is separately found out. After that, to the GP we are reducing the expenses and adding the income. We are getting a we are getting a net profit of 21,500. So with this we can find out the net profit ratio. It comes to 10.75%. Now operating profit ratio have to be found out. So for finding out operating profit ratio we need the operating profit. So friends, we have to segregate these expenses and incomes as operating and non-operating. So first we will take the first item, revenue from operations cannot be considered, GP will not be considered. Next, operating expenses, office expenses. Office expenses is of course an operating expense, and selling expense is also an operating expense. Interest on debenture is also, interest on debentures is non-operating expense. Accidental losses is non-operating expense, and income from rent is non-operating. Commission received is operating income. So for finding out operating profit, we are just adding operating incomes to gross profit and reducing operating expenses. What are the operating incomes? We have commission received, which is 2000 rupees, and what are the operating expenses? Office expenses and selling expenses. See, interest on debentures is a finance charge, so it is not operating in nature, and accidental losses is also not operating in nature, so ignore these both. The remaining expenses, if you add, it comes to 41,000 rupees. So operating profit is GP plus 2000 minus 41,000. We have 36,000 as operating profit. From this we can find out the operating profit ratio. So operating profit divided by revenue from operations into 100. If we substitute, we get 18% as the operating profit ratio. So friends, with this, net profit ratio as well as operating profit ratio is over. In the next video, we will see about the next 3 ratios of profitability ratios.